Hello and welcome to the State of the Fleet Industry, a weekly video series produced by Automotive Fleet magazine. I'm Mike Antich, editor of Automotive Fleet, and today I'd like to examine what's occurring in the fleet industry for the week of December 20, 2022. And for this week's episode, I'd like to discuss the consequences of an economic slowdown that many are anticipating will occur sometime in calendar year 2023. Now, I'm not an economist, but the forecast of an economic slowdown in calendar year 2023 has been extensively written about in many respected business publications and is a frequent topic of discussion by many economists and analysts at many cable business programs such as those produced by Bloomberg and CNBC. But if you're a regular viewer of this weekly market report, The State of the Fleet Industry, you'll know that I put a lot of credence on historical precedent when forecasting near-term future business activity. So what do I mean by that? Well, here's one example that we're starting to see play out in today's market. One early indicator of economic stress is the volume of vehicle repossessions from consumers who are behind on their loan payments. Today, that number is increasing and it's catching the attention of a lot of people. An increase in vehicle repossessions is a recurring historical precedent, and it often is a prelude to an economic downturn. And we've seen this repeatedly occur over the past 3 decades. There's historical precedent for this. When the volume of vehicle repossessions increases, it's comparable to the proverbial canary in the coal mine, which supports the contention of those economists and analysts who say an economic slowdown is currently in the works. But there are many other historical precedents we can also anticipate to occur in calendar year 2023 if we are indeed in the start of an economic slowdown. And this is the focus of this week's market report. When you examine historical precedent from past economic slowdowns, or worst case, from past economic recessions, it invariably reveals that it triggers an increase in insurance fraud. This is a historical precedent, and it's been well documented over the years by the insurance industry. Based on past loss experience, there is, on average, an estimated 24% increase in insurance fraud whenever the economy begins to slow down. So while insurance fraud can be manifested in many different forms, when you're talking about fleet, the number one type of insurance fraud committed against company vehicles in terms of total dollar value is fraudulent staged accidents. And this is based on data compiled by the National Insurance Crime Bureau. So why is this occurring? Well, let me give an analogy to put my answer in context. One of history's most quoted bank robbers was Willie Sutton. When Willie was asked why he robbed banks, he answered, because that's where the money is. Likewise, the perpetrators of staged accidents engage in this fraud because they know that's where they'll make the most money with a lower probability of being apprehended. Insurance fraud against commercial vehicles is very lucrative because criminals know a company vehicle will be insured, or if it's self-insured, most companies will often settle out of court once a lawsuit has been filed. Even smaller vocational businesses that operate only a few vehicles will typically, on average, carry a minimum of $1 million in liability insurance. For some criminals, this is an attractive incentive to engage in fraudulent staged accidents. And while some staged accidents are amateur crimes, most staged accidents are carefully planned and practiced in advance of an actual incident. So, as a fleet manager, you need to be proactive in defending your company against this type of fraud, which has a very good probability of increasing in calendar year 2023. But more importantly, you need to make your company drivers aware that this risk exists so they know how to spot it and take precautionary maneuvers in order to keep themselves safe. The National Insurance Crime Bureau has identified 4 common situations where there is a high risk of a staged accident occurring. And as a fleet manager, it's incumbent on you to remind company drivers to be on the guard for these high-risk traffic situations where staged accidents often occur, so they can be vigilant of these potential threats in advance. So here are the 4 examples. As you can see on your screen, one of the most common staged crashes is what's called the swoop and squat. And this staged accident typically involves 2 or more, sometimes 3, criminal vehicles Two criminal vehicles will drive in parallel to one another in facing lanes while the company vehicle is innocently following behind one of them. In this case, one of the criminal vehicles will pull out in front of the other criminal vehicle, which will abruptly brake, causing your company vehicle to rear-end it. Sometimes a third accomplice vehicle may be involved that'll simultaneously pull up alongside your company vehicle, preventing it from swerving to avoid the accident. I guarantee you that the overwhelming majority of your drivers are unaware of the swoop and squat scam. As a fleet manager, you need to make your drivers aware of this so they can be vigilant to avoid it. The second common stage crash is known as the wave. And as you can see from the situation displayed on your screen, the criminal driver will notice that your company vehicle is attempting to switch lanes, and they will give a courtesy wave to your company driver telling them it's okay to proceed. And as your driver maneuvers into the lane, the criminal driver will then accelerate, colliding with your company vehicle. When the police arrive, the criminal driver will deny ever giving a courtesy wave and will simply say that your company driver was at fault for the collision. The next situation I would like to display on your screen is the third most common stage crash, which is the intentional sideswipe. In this situation, a criminal driver in the outer lane of a dual turning lanes rams or sideswipes the company vehicle while they are simultaneously making the turn. If possible, you should instruct your drivers to try to avoid turning in parallel with another vehicle with this in mind. The final staged accident that I like to display is the T-bone crash scenario. In this scenario, a criminal will wait for a company vehicle to proceed through the intersection and then accelerate to T-bone it. In this situation, the criminal has accomplices who pretend to be bystanders on the street who witnessed the accident. When the police arrive, these accomplice witnesses who are part of the scam will claim that the company vehicle ran the stop sign or the traffic signal. To deter this type of fraud, many companies simply install a dash cam to combat against this type of staged accident so it isn't simply the driver's word against the criminal's word. So what should your drivers do if they're a victim of a staged crash? Well, here are 4 recommendations. First, the best defense against a staged accident is to drive carefully and to be vigilant of their surroundings. The best defense against a staged accident is to prevent them from occurring in the first place. Second, instruct your drivers to never tailgate to prevent the swoop and squat scenario, which requires a sudden stop by the company vehicle. Instruct your drivers to try to keep enough room to make a panic stop without hitting the vehicle in front of them. Third, after a collision has occurred and it's safe to do so, instruct your drivers to immediately use their phones to photograph all damage done to the criminal's vehicle. Doing this will limit their ability to exaggerate the damage done to their vehicle. And in any fraudulent accident, be prepared to have your company finding itself liable for injuries your driver didn't cause. And this scam involves other criminals who are what are called jump-ins. And after a collision occurs, these people are in the general area. They suddenly appear and jump into the criminal's damaged vehicle, claiming that they were passengers at the time of the collision. And at the scene of the accident, your driver should pay special attention to the number of people that are in the other car and record each individual's contact information. And fourth, it's important to always call the police. Even if the damage is minimal, you need to generate an official police report. In summary, the more information your drivers can provide to the insurance company or your risk or legal departments, the better equipped you'll be to fight this insurance fraud. So with this as my final observation, I'd like to conclude my State of the Fleet industry presentation for the week of December 20, 2022, and I'd like to thank you all for watching.